Good morning, everyone, and welcome to today's Forex session. As you probably have realised, we've changed the times again, but we like to do this because if you keep to the same time, it can get a little bit stale, as it were, with the same kind of fundamental news coming along and events, as it were. But so David and I just decided to do so earlier. Maybe we'll go back to later next week, but obviously you'll get an email to tell you. Thank you for joining us wherever you are in the world this morning. It's great to have you with us. Before we start, as usual, please can I draw your attention to the disclaimer. This can be a very risky business and it is possible to lose all of your money, so please do not trade with money that you cannot afford to lose. And I'm sure you've probably seen lots of ads, the new ads for brokers, certainly in the UK with the new ESMA rules. They have to actually tell you how many, the percentage of their clients that are in loss. I think the figures can be perhaps a little bit not misleading, in the sense that it's not the numbers that have crashed out. It could just be that the numbers that are currently in loss at a certain time, and then maybe they're holding on to losing positions, and those positions sort of turn in the next day, the next week, or the next month. But anyway, that's the nature of this market. As I said, ultimately, don't lose, don't enter with money that you cannot afford to lose. As usual, I have David with me. I'm just going to pass over to him and then we will start.
Thanks, darling. And can you hear me okay? Yeah. And all I would say is that just to reinforce that fact that education is key to an understanding of this market, which is the most complex of all the capital markets, and of course having the right tools and indicators to help you and support that decision making, all of which is supported by volume price analysis. So there we go, there's the pitch for us. A very warm welcome to you wherever you are in the world. If this is your first visit to us, we run it as a two-hander, Anna and myself. We do primarily focused in terms of platforms. We flip-flop between the two. I've got NinjaTrader running on my side. Anna's got MT5 on hers. If you are on the MT4 platform and you're very familiar with that, then I would urge you to take a look at the MT5, because in terms of look and feel, it's very much the same. But what it also offers you in terms of spot forex, you get a multitude of different time horizons. So MT4 can be a little bit restrictive in that sense in terms of the time frames you can choose. If you move to MT5, you'll find you've got a very wide array of time frames. As you can see on the left-hand side there, you've got all these different time frames that you don't have on MT4. In addition, of course, it's a multi-asset platform as well. So I would urge you to take a look at it. We've ported all the indicators over from MT4 to MT5, and as a customer of quantum trading, it's your choice. You decide whether you want to run on MT4 or MT5 and switch between the two as and when you feel the need or requirement. If you have any questions, please just drop them in the chat box. We're happy to answer them there. If they're a little bit more complicated, then we will answer them on air. I'm just watching the Renko there. Got a nice move going on cable right now. So I'm going to pass back to Anna and we will get going.
And it's no surprise really to start with the British pound, given what's been happening both in the context of the Brexit negotiations, and it's something that David and I have now christened the Barnier bounce, because every time he seems to say something positive, sterling takes it responds very favourably, and certainly with cable, that's what we saw yesterday. Obviously, and oh, here we are, and just as I said that. Dear old Forex Live also confirm what I said. It's nice to be proved right once in a while. The reason I've actually got it here, well, a number of reasons. Obviously, we've got Brexit in the background. This is causing all sorts of volatility. Volatility can, as we've said often in the past, can be your greatest friend, but it can also be your greatest enemy if you don't understand what is happening with the price action and the volume. But I also want to have it on my screen, as obviously we're coming into the London Open, so inevitably the British pound, as is the euro, will be much more in focus than some of the other currencies and currency pairs. And thirdly, I mentioned a couple of sessions ago, I can't remember quite when, and I didn't follow through, unfortunately, my fault. When we were looking at, I mentioned a confluence of levels, because this market, particularly more so than any other instrument, levels are so key. Levels in terms of round numbers, zeros and fives, levels that are going to be affected by what are called the option expiries, and levels that are of absolute, key to the people who make this market, and that is the large institutions. And again, they're usually around the zeros and fives, and these levels you will find displayed, they're on what's called the order board. It's what's part of order flow writing. So it's when a huge institution has an order to fulfill, either buying a great block of currency or selling a great block of currency for a client. They have to go out and buy a load of yen or sell buy a load of pounds, etc., etc. And what they will do, they will quote a rate to their client and then go into the market and not only make the commission on the order, but they'll make something for themselves, and they will spend money to actually drive the currency pair in question to a level. Now, how do we identify, how do we know which levels are significant, which are more important than others? And this is why so many traders use Fibonacci. Fibonacci is very, very popular, both, I have to say, both from an institutional point of view and certainly amongst retail traders, because they give hierarchy to the chart. I don't personally use Fibonacci. I don't dismiss it. Is it a self-fulfilling prophecy? Possibly. David and I instead have looked at Camarilla. Camarilla levels are based on the old sort of floor pivots that the traders of old used to use. We've taken the concept and we've actually twisted it slightly. So we actually come up with these levels that are painted on the chart. But you can use Fibonacci, you can use, people sometimes use moving averages. Moving averages give you a level, the 200 MA, the 100 MA, you take your pick. But what's interesting with Camarilla is, as I said, this confluence, because the Camarilla protocol has some quite interesting rules, if you like. They're not fixed rules, they're not set in concrete, but they have these guidelines, if you like. And one of the guidelines is the R4 level that we see here for cable. Now, this is on the hourly chart. With regard to this indicator, the way we have developed it, most traders who use this use it on a daily basis. So you take the high, low, and close. You get your levels. You put them on at the start of the new trading session. It's also fallen out a bit out of favor, because obviously we have 24-hour markets, and they say, well, price is just on a continuum, as it were. So how can you work this out? But actually, there is a close to this market. It's about it's 10 o'clock in the evening. So on the chart, on the faster charts, the indicator will calculate, so the daily levels. If I just move that down a bit, hold on a second. So for example, we have here, this is the 3-minute chart here, and I'll just scrunch that down a bit. There we are. So you'll see here that the levels that are painted on this chart are not the same that are painted on the hourly chart, because the way we have structured this indicator is that the daily values that appear on charts up to the hour are calculated on the previous day's open, high, open, low, and close. And for the hourly chart that we saw, and these change every day, obviously. Once the session rolls over at about 10 o'clock London time, then these values change. But on the hourly chart, as we see here, these values will now stay here all week. They only change once a week. And the importance of this is, two of the most important levels are the R4 and the S4, because according to the protocol, when price reaches this particular level and it closes above, it actually closes above the level, then the idea is that you are looking at a potential, a high probability that the price is then going to break out and break away. And what is interesting is the S4 level here, which is at 30.48 for cable, as we see here, it actually stopped just here, 8.47. This is the volatility candle from Barnier. We had, as usual with volatility, the retreat into the spread of the candle, and then bang, it stopped around the R4, and since then it's gone into consolidation, as you would expect after volatility. But the R4 has, if you like, acted as a kind of cap, as the resistance. So now we know. So you come to your trading today, you say, right, this is the R4 is now, which is at 30.49, is hugely significant. How that plays out on the faster time frame, in fact, it's let's have a look, 30.49. I think it's, yes, it was actually the R2 coincided, as I said, with this confluence. It has attempted to break through that, and it has, but the level that we have to now watch is this R4. Now this is going to kick over at 8 o'clock. By coincidence, obviously, when the London Open, London opens as well, and it's having an awareness of this confluence, the significance of a level at a faster time frame, how that may, if it's hitting a level that is hugely insignificant on a slower time frame, and you're in a trade or you're looking to take a trade, and you think, why is it moving? Why is nothing happening? And that could be the reason. And you have to find some way of identifying what is important. Where are these points of confluence? And this is just a perfect example. Now, moving over to our currency strength indicator, this is on the 30-minute. What we have here, we had the move higher in the British pound here. Then we've had this constant, this pullback, then this constant attempt to rise. Now this pullback. This is really reflecting what we're seeing, how these levels keep being hit and then perhaps pulling back as it were. And we often talk about reversal trading. We're looking for an opportunity as a trader to get into a position where there's a high probability of taking a trade. And reversal trading, i.e. when a currency pair is overextended, we're looking to move in, we look at our candles, our candle patterns, shooting stars, hammers, whatever criteria we use for our entry. The CSI is highlighting at the moment, is highlighting two things. It's highlighting the, if you like, not the struggle, the fact that the pound, keeps trying to rise, then it pulls back, now it's trying to rise, now it's also reaching a point of overextension, certainly in this time frame, and we can see that, and we can see how this also relates to the levels that we see on the chart. Now, with seeing how this plays out on the price action, we have a Renko chart where we don't have time. All we have we are seeing 2 pips go through the market. And as a trader, we may have missed the move that has been in this move higher that's come off since the 30.22. Where are we at the moment? Let's just move that 30.22. It's about a 30 pip move, isn't it, David? Yeah, it's about a 40 pip move, which is pretty good for, let's call it a scalp. I mean, a scalp is not a 40 pip move. It's more like a 4 pip move. And you come to this and you say, well, what am I going to do? Am I going to try and do I think if this is going to go higher? And I want to join in the move, or actually, do I now want to wait? Do I think, because I see this overextension, am I going to wait for a reversal? And there is no right answer to this. I can't say to you, no, because you've missed all the move, you really have to wait for a reversal, or no, there is the potential that this is going to go higher. All you can do is look at the levels, see how the price is behaving at these levels. Where is it likely to pause, and consider, if you do want to try and capture the move higher, and there's absolutely no reason why this isn't going to go higher, then you're going to have to decide what type of, maybe use it at what type of order. So this is where you would possibly look at using a limit order rather than a market order, or you simply wait and say, no, I've missed the move. It's hard to see a 40 pip move in a fast time frame and think, oh my goodness, why, how did I not see that? And the temptation is to jump in and say, no, I'm going to go in. I really, I know I've missed it, but the fear of missing out on even more of a move, you then jump in without sort of considering it more carefully. You sit back and you say, no, I've got the London Open coming. I can see this overextension. I know what the levels are. I know where they're going to hit, and I will wait for that reversal. I know it's a little bit long in my explanation, but I wanted to bring in these this idea. You've really got to understand the importance of these confluence levels. And just to carry on the Camarilla, if I just shrink that down, most traders who use Camarilla or who think of using it just use the 4 levels. We've actually introduced 2 other levels. They're kind of price objective. So if it does get past the R4 successfully with lots of volume, and of course at the bottom here, let's look at the volume and see what that's telling us. And there seems to be, a decent amount coming in. It's certainly above the average line at the moment, and that will certainly pick up as London gets underway. Where is this? We're always looking. We're trying to anticipate where the price is going next, and that's why we put in the number 5 and the number 6. Finally, just before I pass over to David, what we also have to be aware of is the counterparty currency in cable, which is obviously the US dollar. And what's interesting on this one is that it's quite a heavy sell at the moment. We can see here with this red line, and I've also got here, which I always have, is the dollar index. We've on XM, they actually give you a version of the Dixie, and you would also be looking at that to see if, because that will also give you a sense of the strength of whether this is pound buying or whether this is as a result of heavy dollar selling. And what we have is we're looking at 2 forces here. We're looking at the force on the pound and the force on the dollar. And if both currencies are being pushed in both directions, that will also add momentum to any move. And what the levels will then do is they will then pick out on the chart where that is likely to be heading next. I'm just going to pass over to Dave.
Just going to change screens over to NinjaTrader. Should be coming up now. And there we are. And if you were with us yesterday afternoon in the, I'll just move the chat box out of the way. If you were with us yesterday afternoon in the US session, then you'll be very familiar with this particular workspace. I've got the euro dollar here because there's been a very strong move, and it really mirrors what's been going on in terms of cable. Just very quickly to run you through what I've got on the screen. I've got the tick speedometer up here, which delivers the tick chart settings for the chart. I've got the Renko here for euro dollar, which is currently running on a minute, and that's delivering a 1.9 box size for this particular pair. I've also got the equivalent tick chart behind that on a tab there. And down on the bottom left, I've got the 5-minute time horizon, and over on the right-hand side, I've got the 15-minute time horizon, and they're all linked together, which is one of the nice facets of NinjaTrader. If I change to another pair or another market, it automatically converts all these charts to that particular market. And Sahil, I will answer your question on the VPOC. I'll go to another chart to answer that. But in a way, it does go to the heart of what this market's all about, which, as Anna said, is all about levels and flow. But one of the reasons I wanted to focus on the dollar, and particularly the euro dollar, was really just to highlight one facet, which is to do with this long-legged doji candle, which came in. Again, this is nice thing with NinjaTrader is it does actually print the time, the correct time frame that you are trading, the time horizon in terms of your local time. This is 7 o'clock UK time. This is when Europe gets underway, and now this is 7:30, 7:40, 7:35, etc., etc. So this is Europe open, and we get this big volatility which appears, and we've had 2 or 3 of these in the run-up, certainly early doors when we were just getting set up. We had volatility, another volatility candle, market trades inside, then we get the long-legged doji candle with a ton of volume under it. Now, it's very easy at that point to think that a long-legged doji candle is a reversal. It may be, it may not be. It's not indicative of a reversal. All it's indicative of is volatility in the market. So it's not a reversal in the sense of you're looking at things like shooting stars or hammers, those sorts of types of candle patterns and clusters of candles. This is volatility. All it's telling you is that there has been a struggle in the market, a ton of volume has come in, and there is indecision. You cannot imply that this is a reversal. It's nothing more, nothing less than a pause point, indecision. It's also triggered in this case with the volatility indicator, so it's a question of just being patient and waiting for the move to be confirmed in one direction or another. So please don't jump to the conclusion that when you see a lot of volume, a long-legged doji coming in terms of a decent trend, that is a reversal. It isn't. It's just indicative of volatility, and you have to wait and be patient. So I just wanted to make the point, and you can see that also reflected on the faster time frame charts. This is the 3-minute for the euro dollar, and that's reflected here, and you can see the associated volume under there, again very high. What's interesting at the moment is that we've got a lot of volume coming in on this candle here, and it didn't actually go anywhere. So we've got a narrow spread candle, ton of volume coming in underneath that candle. What are we expecting at that point? Well, certainly weakness at any rate, and a possible reversal in price, which is what we're seeing at the moment, only minor. We're only talking about, what, 5 or 6 pips here, but nevertheless, that's an early warning signal. It's a classic anomaly. It couldn't be anything else. You've got lots of effort and very little result. So what are you expecting? At the least, some sort of pause point, some sort of reversal in price action. And really, that highlights the whole business of volume price analysis, because what it is it's trying to give you a heads up as to anticipating what is going to happen next, what is likely to happen next. And in understanding that and having a common sense logical analysis of what is likely to happen next, it removes a lot of the emotion, because this business is really just about managing emotion. It's not really about anything else. It's being able to manage your emotion through the pullbacks and the reversals, which inevitably come and go in every single move you'll ever trade. And volume price analysis steps in at that point to try to give you, to reduce that emotional response when a market reverses like this. You're in a decent trend maybe, you've got some decent profit in the bank, which you've already mentally banked anyway, and now you're starting to see that dwindle away a little bit. And when you see something like that, it just gives you a comfort factor to say, oh, okay, that's what I'm expecting. Don't need to stress too much. I've just got to keep an eye on it and not exit too early and get pushed out of a trade purely on an emotional response to a reversal. Because the mathematics of trading is very simple. It's holding positions longer term, and when I say longer term, that could be on a 1-minute chart or a 1-month chart, makes no difference. It's all about holding and maximizing what you can out of any trend that develops, whether you're getting into a trend on a reversal, as Anna said, you're getting in early, you're putting more risk on the table, but you're actually getting into that trend early, or as in this case, for example, where the trend is underway and you have to make a decision whether you're going to jump into that trend or whether you actually want to wait for the reversal to develop, or you see the potential for a reversal developing. You can see over here on the tick chart, I've got this running on 279, just need to speed that up a little bit, just speed that up to 329 tick. There we go. And again, the trend monitor delivers that sort of job as well, because what it's doing is it's trying to hold you in through these various little pullbacks, these pauses, these congestion phases. And as you can see here, we've gone bright blue, we've gone into a little bit of dark blue, no transition, but we went back into bright blue again. Now we've gone into a little bit of dark blue. Are we going to see this transition back into bright blue again? Because we seem to be breaking through this ceiling of resistance, and the floor of support below is helping to keep us in. And what we're doing here, if we flick over onto the Renko, we've got the accumulation distribution here, we've got the trend monitor, we've got our trend dots, and we've got the pivots, and they're all helping to keep us in. The trend dots transition first. You can see here they go into gray, back into blue. We had a little red one there, then we're back into gray, now we're back into blue again. Underneath the Renko, we're not inside the Renko, we're underneath it, so it's pushing higher. The trend monitor has not flickered, it's been solid blue throughout, helping to keep us in. And then we've got the accumulation distribution up here with all the various levels as well. And then you can blend that with the time brace charts. We've got the 5-minute here and the 15-minute here, and they all tell us different things. If you're looking at the last 15-minute candle, this was our doji candle, indecision, not a reversal in trend. It could have been a reversal in trend, but it's just signaling indecision at that point. The next candle, what have we got? Nice widespread candle, excellent volume underneath it, very supportive right now. On the 5-minute chart, we've got the little pullback that we see here, which is really reflected over in this wick here. But here we see it here, and what do we see? We see volume coming in on this candle, which is good, high volume, so potentially some reversal going on. But on the next candle, we see the volume dropping away. So at the moment, for the time being, the selling pressure is diminishing. We've got a down candle, but the volume is relatively low on that candle, and we see the market pick up again. Now, bear in mind, obviously, that what we're looking at here in terms of range, this is 20, 25 pips, you know, from here to here. So it's not a massive move, but nevertheless, the principles are identical. And, excuse me, just going to switch off for a moment. To go to Sahil's question, let me just switch workspaces here for a moment, if I may. Let's go to this one. All right. Just a single chart. This is euro dollar. This is on 5-minute, and we've got, as you can see, we've got the volume point of control, and we've got the accumulation distribution below. And in terms of using these indicators, it is very much a case of stepping up and down the time frames of choice. So if your time horizon is out to the 60-minute, the daily, whatever it may be, or whether it's down at the much faster end of the market, the principle is exactly the same. If I step this up to 60-minute, what does that actually tell us in terms of the volume point of control and the accumulation distribution indicator and everything else? Well, the first thing that's most important is that whether we are an intraday scalping trader or whether we are a longer term trend trader in these sorts of time frames, the first thing that strikes you instantly is that in this area we have two major potential levels which are going to cause this particular pair to, at the very least, pause. The first is the volume point of control itself, this yellow dash line, which is the fulcrum of the market. It is the heaviest concentration of volume on this time horizon. You can see it here by some distance. Why is it so heavy? It's because the market over here congested for a long time at this level. Clearly, for whatever reason, this price point is important to the market. We don't need to understand why it's important, just accept the fact that it is. And the reason it's important is because it's telling us loud and clear, the volume point of control, this area of price is very heavily congested with volume. In addition to that, and immediately above it, just really to confirm that, you've also got a very heavy area of potential resistance as denoted with the red dash line. So we've got two major reasons here that the euro dollar on this particular time horizon, and indeed whether you're an intraday trader trading on a 5-minute chart or a 15-minute chart, you certainly need to be aware of it, that the potential is that this market is likely to, at the very least, pause in this region for two reasons. First of all, because you've got the volume acting as resistance, in other words, volume congestion, because what the volume point of control does, and it's exactly the same on the MT45 platform, what it denotes is it basically swings volume from the x-axis down here, where we're looking at it in a linear way. We're looking at this relationship between volume and price. It moves it up here to bring in the aspect of time, because once time is introduced, you're looking at the relationship between volume, price, and time. And where you have these very high concentrations of volume at these price points, then you expect the market to congest. The accumulation distribution indicator is based on price. It works in a similar way in terms of what it tells you and the information it delivers in terms of the dynamic support and resistance indicator on the MT45 platform, because it's working off price. It's purely looking at the price action and delivering those levels where price may struggle. And they are delivered up and down the chart. And then it's a question of looking at those levels and arriving at a decision as to what you feel comfortable with. And then, of course, it's bringing in all the other aspects. Let's go back to let's go back to the 5-minute again. In fact, let's just have a look at the 30-minute. Now, what's interesting about the 30-minute chart is what we're seeing here is a slightly different picture. The volume point of control, and in fact, it's just jumped lower because these volumes are constantly building and rebuilding. The volume point of control is a dynamic thing. It's not static, it doesn't stay in one place, it constantly moves around. What we've got on the 30-minute time frame, we've got very light volume in this region. There's between 26 and 30, and indeed between 20 and 30. That is part of the reason we're seeing the market move through there relatively easily, because there is very little in the way of volume to cause the market to pause. The same is true here, where you get these low volume nodes, where we've got slightly lower volume here, where we've got very little volume down at this level. When the market moves to these levels, as a trader, what your expectation is that it will move through there relatively quickly, because there's very little in the way of volume congestion to cause it to pause. Now, there may be price resistance ahead or price support below, and that's the way to use the two indicators in combination. Yep. With what? Yep.
I think there was some kind of delay from your the charts.
Oh, okay. Okay, fine. Sorry, I think there was a delay on the chart. So I hope that answers that one for you. Just going back onto the 5-minute, and just flicking through, see what's going on elsewhere. If we just go over to the CSI, and on the slower time frames, you were looking at the euro dollar rising very strongly and the dollar's falling very strongly. You've got exactly the same here on the fast time. This is on 15-minute. The euro is still rising strongly. The dollar is still falling strongly, but maybe flattening off a bit. And you're really spoiled for choice at the moment, because you've also got the yen starting to dive. You've got the Swiss franc here, which is selling off very strongly. And one of the questions we get asked many, many times in terms of starting in the forex market, which indicator would you consider to look at first? And we always suggest you start with the currency strength indicator, because it really does isolate out the individual building blocks of this market in a very visual, very simple way. It reveals which currencies are being bought, which are being sold, which are rising strongly, which are falling strongly, and which pairs to look at for consideration. Right now, for example, I don't even need to look at a chart of the Euro New Zealand, this grey line, to tell you that the two are rising together, and therefore it's unlikely there's going to be any strong trend. There may be, because one of them will be rising perhaps more strongly than the other, but they're both traveling in the same direction. It's rather like two trains traveling at slightly different speeds. The divergence in speed is limited between those two vehicles, because they're both traveling in the same direction. If they're traveling in opposite directions, either towards one another or in opposite directions away from one another, then clearly there is going to be a strong trend developing, and that's what we're looking at here. Just bear with me a moment. Apologies. Let's just go back to the chart for a moment, or a 5-minute. Decent volume under here. No great anomaly, nice widespread up candle. We've got the volume point of control. We look as though we're continuing to move away. Trend monitor's still nice and blue. We had these transitional phases through here, but we never actually went to bright red through this period of price action, and we're back into blue, and the trend line here is still well away from the midpoint here. We just go over to the currency array and just get a sense of what is going on between those two pairs. If we just isolate out the euro, for example, well, it's not universal. Certainly up here we're seeing euro yen, we've got euro dollar, and we've got euro Swiss up here. The others are lagging a little bit behind, but you know, we could see them move up here in terms of strong euro buying. But at the moment, you know, we've got the euro dollar up here in spot 3. If we isolate out what's going on in the dollar, similar, we've got a lot of selling of dollar, particularly against the CAD, and we've got selling against the euro dollar, and these others are, you know, mid-table, but nevertheless, we are, you know, holding these positions. What we're looking for ideally is for all these to be ranked at the top or the bottom, depending on where the dollar sits in terms of being the counter currency or not. Now, what's interesting over on the currency heat map, if you were here last week, you might recall that in terms of the New Zealand dollar, which has been beaten to death for various different reasons, particularly fundamentals. But if you recall, and you can probably go and dig that video out on the YouTube channels, but if you recall, if you were here last week, you will remember that the whole of this row here for New Zealand dollar was bright red. Every single column. Now, obviously, these faster time frames, the 1 minute, 5 minute, 10 minute, they do change relatively quickly. But what's interesting is on the heat map, which works at a different speed, if you will, certainly in terms of the ranking of these pairs and their bullish and bearish nature, what we are starting to see now, certainly in terms of the New Zealand dollar, we are starting to see this bullish sentiment. And I said at the time, what you're waiting for is you're waiting to see that bullish sentiment for the pair start to move back across the columns. And once it starts to move out into the dailies, and there's got a way to go, but you're certainly starting to see that effect, and you're starting to see that also in terms of the Aussie dollar, which is another one that's been heavily beaten down over the last few weeks. So in terms of these extremes on the currency heat map, just isolate that out, there we go. It's always interesting to look at the extremes, because what the ranking ladder here is doing, it's taking these bullish and bearish sentiment across the time horizons, and it's then weighted, because there will be little point in this particular pair moving because a 1 minute time horizon had turned bullish. So what we do is we actually weight it across the time horizons. So clearly a daily or a weekly sentiment will have more weight than a 1 minute or a 5 minute. So in looking at the currency heat map, what you're looking at reversals, you're looking at overbought and oversold over a much slower time horizon, certainly in terms of the ranking ladder up and down the left-hand side of the column. You can see at the top we've got Euro New Zealand, very strongly at the extreme, very strongly overbought, pretty much green throughout, only minor red cells here and there. So as a longer term swing or trend trader, this is certainly one of the indicators you would look at in terms of getting a sense of where the pairs are in terms of dailies and weekly time horizons, and looking at those particular opportunities. Let's go back and see what's going on. We're still moving higher. We're not moving higher with great momentum, but nevertheless we are still moving higher. Let's just flick up onto the 15, see what's going on there. Pretty similar picture. You can see the trend line here is rising nicely. We're still pulling away from the volume point of control the whole time. Got some decent volume. We'll see how that one closes off. Let's go to the 30. Let's just see what's, there we are. We've got moving away again, back up to the 60. And what's interesting here is we seem to be starting to penetrate this region. Yes, we're at the volume point of control. Yes, we've got some heavy resistance ahead, but we are starting to move through that. Now, that's not to say that we will congest at this level, but it will be no great surprise. And ahead of that, we've got this resistance overhead at where another 20 odd pips above here, which caused the market to pause at these sort of levels. And remember always, with both with the dynamic support and resistance indicator on MT45 and also on the accumulation distribution here, these are very precise levels. These are not indicators that are broad brush. You haven't got, a 50 pip range of this is potential support and this is potential resistance. These are very precise. They are pinpoint. And just remember that fact, because they are literally down to pip level. They are very, very precise indicators of levels and flow. I'm just going to pass back to Anna at that point.
That's actually quite a nice time to come back over, because we've got 2 minutes to the London Open. Can you hear me, darling? Are you okay? Oh, brilliant. And we were looking at this, well, half an hour, 20 odd minutes or so ago, and really looking at, as I said, the levels, looking at the structure of the chart. If we see here, in fact, I'm just going to reduce that. There we are. That's the strong move higher, and essentially it's been drifting higher, but look at the trend monitor, a lot of pullbacks, threats of moving lower before the price sort of drifted higher again. And we can see here it's a little bit scrunched at the moment. We can see the congestion that we're looking at the moment as we wait for the London Open. And this is very, very typical that you would see at this time of the trading day, before a major center is about to open. There's there's a lot of closed. Certainly, the Asia is either closed or closing down now, so there's a lot of closing out, and new traders are coming on board. And it's this market, as I said earlier, brokers are now having to put up their stats on the number of traders who are failing and are losing money. And one of the things is in a way they're the victims of their own marketing success, in the sense that it's been touted as a 24-hour market. You take a trade anytime, any place, anywhere, and in theory that is correct. Have you got your mic open, darling? Sorry. No. In theory, that is correct. In practice, this is 3 separate trading sessions, all each with their own characteristic, each with different participation levels, and you have to see it as one market opening, one market closing. There is a continuation of sentiment always, but the traders coming in London, they will do their own thing. They have their own agenda, if you like. And let me just see what happens on the hourly chart here. What happened here? Let me see. Yes, we had a lot of volume going in, but look at the candle. It just about closed over the R4, but it closed with a wick to the top of that candle, suggesting certainly there has been a weakness there. There has been selling in there, and in fact the candle that's opening at the moment is opening as a down candle. Now you've just come into the London session. You said, fine, you've got this congestion phase here that we see here. We haven't transitioned back into bright red. What we want to see, if you were going to use the Renko as part of your decision making process, you certainly want to see more red. You have to see the price coming out of this congestion phase. Where's it got to go below it? It's got to go below this the 30.48. You just have to sit and wait, and certainly wait until the trend dots go red, and this also goes to bright red, because you want to see both the trend dots and the trend monitor, and you also want to see significant levels broken with volume. And what you also want to see here, you actually want to see this reflected. Here we see it on the CSI. I've actually got this on the 20-minute CSI. The pound has already, you know, there is some, what this is telling us is there is now selling of the British pound, probably not against the, it's yet against the US dollar, but where? Well, the New Zealand dollar is rising strongly. So if we had a, you know, if we looked at an equivalent workspace for pound New Zealand, you will probably see a much stronger move with selling of this pound. And look at the euro. The euro is still, you know, trying to stretch higher. As I said, if you're looking to take reversals, this is what you're looking for. You're looking for overextensions. You're looking for price that is being, they're trying to force it higher with a lot of volume, but it isn't going anywhere. So, you know, that's volume price analysis helping you make a, you know, helping you with another step in your trading decision and giving you the confidence to say, look, you know, this is what I'm seeing on the chart. I'm seeing a price, I'm seeing a candle. It's a very squashed candle, but it's got a ton of volume underneath it, but it ain't going anywhere. What is that telling you? It's telling you that it isn't going to go anywhere, and the chances are it is going to reverse. And then you have to look at also what level it is at the moment. If you've got a CSI, what is that also telling you? Is that currency also turning over, perhaps in a faster time frame, not necessarily in the time frame that you are looking to trade. Now, moving to the 3-minute chart, because I use the 3-minute usually with the, you can use the 5-minute. If I move it up to the 5-minute, it's not quite so, it's even more noisy. Let's go back down to the 3. There we are. One of the things I like about the MT5 is because you have this wider choice in time frames, it also helps with your candle analysis and understanding of candles. So obviously the 3-minute, you double it up to the 6-minute, and then you double up. And you've actually got the 12-minute as well. And you see how the noise is taken away, and you think, oh yeah, and it just gives you another perspective on what you're looking at, and it's very clearly marked. You can see there everything at the moment is still blue. Let's move that's it. There's a lot of volume going in there. Can you see that volume bar there underneath this candle here? Let me just expand that a little bit. And this is what I mean. And you've got weakness coming in there, a lot of volume with a big wick to the top, and narrowish body. What is that telling you? That is also telling you this price is looking weak, and the potential is, are you looking to join this on to move higher? Possibly not, based on what you're seeing at the moment. And again, the levels, you've got the R2. If this is going to go lower, where's it going to go? It's going to go back here, 30, 37. Possibly a trade? Yep, why not? It depends what you're, you know, what you're looking to take out of the market. Let's move that to the 3-minute. So when you set your workspaces up, you have to have more than one time frame. The time frame that you're looking to take the trade on, a faster time frame, and what I call a benchmark time frame. And I use the hour because I know the Camarilla levels, they are different from the intraday ones. And it just gives me, am I looking at a 3-hour chart here? What am I doing? Sorry about that. I've clicked the wrong one. Beg your pardon, 3-minute chart, not the 3-hour chart. And what's interesting about the 3-minute chart here is we can see the volume coming in, but what we're also seeing is we're seeing a fall in volume on these down candles. Volume and price, whether the price is going up, whether the price is going down, you have to have volume to support that price move, whether that price move is going up or whether it is going down. But it's a nice example of what happens when you have a crossover session, when you have had congestion, when you've got levels, when you're looking at individual currency strength or weakness, and how it will all play out on the chart and the different timeframes. But what may happen with this is it may simply stay in congestion. And the reason is we have actually got some important news at 9:30 this morning for the British pound. We've got some average earnings, which are obviously quite important to do with interest rates, etc. So, you know, we've looked at the technical picture. You also have to bring in the fundamental picture, particularly for, you know, the currency that you're looking to take a trade on. But it's only 7 minutes past the London Open. It could just be nobody can decide, you know, what to do. Maybe they're just waiting for Mr. Barnier. What do you think, David?
Thanks, darling. It's certainly these are certainly for cable at any rate, and also just to pick up on what Anna was saying about the sessions. It is extraordinary how often what we see in terms of moving through the London session, you'll see a market moving firmly higher, London opens and promptly reverses, or there's a sharp move higher followed by an equally sharp move lower. It is classic entrapment, and it occurs in all these crossover phases. What's also interesting when you move through and break the sessions up, and we go from London at 8 o'clock through to US at 1 o'clock, as the US markets get underway, again, you often see these complete changes in sentiment. So the 8-hour trading day is almost broken up into these constant phases of price action, maybe bullish in the London session through to US, and maybe a market then turns bearish as the US session gets underway. It is classical price action, but if you don't understand the reasons why, and you don't understand how the markets work, and you don't understand the session crossovers and why they're important, you're left floundering as to, you know, why has this suddenly happened. I'm just keeping an eye on what's going on in terms of the euro dollar on this side and everything else, and also just on Anna's chart there on the Renko, you can see, and it really comes back to this whole issue of blending together your approach in terms of using time-based charts or non-time-based charts. Renko is a classic non-time-based chart. You see momentum revealed there. Renko also removes a lot of the noise. You get these nice bricks, so it smooths everything out. But as you can see, the support and resistance work in exactly the same way on the chart, whether you're on a time-based chart or whether you're on a non-time-based chart, whether it's on a tick chart or a Renko chart, doesn't matter. They all work in exactly the same way. And just popping down onto, just pop the 3-minute cable bottom right. And, you know, coming back to what we were talking about earlier on, which is the volume point of control and the various levels, as I said then, you've got, as you can see there, we've got a very strong potential level of support. What are we on now? At 130.38. We've got another level at 130.46, immediately below the price action. And where are we trading right now? We're just trading around the volume point of control. That is our heaviest concentration of volume. If this, sorry, which is also at the R2 on the Camarilla. And the histogram there, if the market broke below the 130.46 support platform, then below that, you've got a low volume node. So the expectation, the anticipation would be if the market moves into that area, it will likely move through that pretty quickly down towards the next level, which is at 30.38. And if it went through there, then you've got a low volume node below that and very little resistance or potential support rather in the way, and on down to the next major level, which is at 30.28. So, you know, it's using everything in combination. You're looking at the trend monitor. What have we got? We've got a transitional color coming in there. We've gone from bright blue, we're into darker red now, as you would expect. We're in congestion. You're looking at the volume point of control. You're looking at the currency strength indicator. You know, what's this currency doing? Is it overbought, oversold? Is it a potential reversal? And as I said yesterday in the US session, how you approach this market is up to you. You can be completely indiscriminate and you can take every single tactic you choose to market. Alternatively, you can take a single tactic. You can say, I am going to only trade breakouts. I am going to be very patient. I'm only going to look for breakouts. I'm going to look for congestion. And when I find it, I'm going to look for the opportunities to take trades on breakaways. Fine. Or you say, I'm going to be a reversal trader. I'm going to use the CSI, the volume point of control, the volume price analysis, the CSI, all the other indicators. What I'm looking for is overbought, oversold. I'm prepared to lay out more risk on the table because I want to get into a trend early. I'm going to be a reversal trader. We have some hugely successful traders who work on 30-minute, 60-minute, various time frames. That's what they do. They're looking for those opportunities. They start with the CSI, then they're looking at the charts, all the other indicators, and they're prepared to set the stops fairly wide to allow for the congestion phases, which we've seen on the pound where it's flip-flopping around in overbought, and to be in a position early which maximizes the return on that particular trade. But that trade comes at a cost. It comes at a cost of putting more risk on the table. So you can be a single tactical trader, you can trade all tactics to all markets or all pairs, or you can take a single tactic and apply it to all pairs, or you can mix and match and reduce the number of pairs you focus on. There are so many different ways to do it. There's no right or wrong way. You just have to find what you are comfortable with as a trader.
And just to follow on from what David said about tactics, and go right back to the early sessions that we've done in this series of webinars. If you understand what the price action is doing in the time frame that you're looking to take a trade, clearly cable is struggling to move higher, to continue with the the bullish move that we had yesterday. So what are we looking at? We're looking at congestion. You say, okay, this is what my chart is telling me. It is in congestion, and I don't like trading congestion. I don't like being a breakaway trader. You say, fine. But you've recognized it and you say, well, I, as David says, I will now be patient. Or you say, you'd like to trade cable, and because you do understand the C, what we've called the C state of the market, it is in congestion. There's no volatility in the congestion at the moment, and you say, well, I know what it's doing, and the best tactic to use for a congestion phase is it has to be, you have to, this on the faster time frames, there's not enough of a range in the congestion to be able to go in and out and try and take 5, 6, 7 pips. So you say, okay, let's wait, and I'll maybe use limit orders, but it goes back to identifying what is the price doing. It is clearly in congestion. Am I comfortable with that? Do I want to take a trade when a market is in congestion? And it is in congestion more times than they do trend. So maybe you have to think, then well, maybe you should develop a way of identifying when it is going to move out of congestion, and volume will do that, because what volume will confirm is whether it is a confirmed breakout or it is a fake out. So there's lots of ways of approaching this, but I'm looking over at the CSI here. I don't know if David has got I don't think we've got time at the moment, but if you were looking for reversals and you're thinking, okay, there's been a move higher or lower, and I'm actually looking for a reversal opportunity, well, the one that you would be considering is certainly the yen, which is very oversold down here, and the euro, which looks very overbought here. So that would be one. If you didn't have a set number of pairs that you like to trade, would certainly go and have a look at the euro yen, because obviously there has been some quite nice price action as we've been speaking. And in fact, what's also nice here, as we can see, is despite this change in color, it looks like maybe it is going to move higher, but we have to wait, as I said, with patience, wait until these levels are cleared, and cleared with good volume. Is there anything else you want to say, David, or is that it?
I just want to flick back here very quickly.
Absolutely.
Very quickly, just hopping over to the original workspace, which hopefully has come up. Does that come up on your screen? Yes. Yeah, there we go. And this is the move that's developing, and we're staying with the euro dollar, and it's really all just confirming one another. I've got this is the dollar index down here. You can see the dollar is continuing to slide. We have this congestion phase through really where we've been on air, a little bit of up and down, and now we're starting to see an apparent further deeper move for the dollar, which of course is reflected across cable. And it's a very solid move for all the major pairs right now, but particularly for euro dollar. And we've just got classic VPA price action in place here. We've got rising volume, rising price action, all confirming up onto the Renko. Just a brilliant move. Trend monitor's bright blue throughout. There's absolutely no flicker of emotion there. You know, the trend dots are just keeping us in. We're holding this position. We're up to 160.43 now. We're moving pretty rapidly. Now we're starting to see that is reflected in the dollar here, falling quite fast. And in falling quite fast, obviously what we're now looking out for is potential volatility coming in, the volatility trigger. If we see the volatility triggered on the chart and we've taken a nice chunk of profit out of this lot, then that may be the opportunity to certainly take either reduce the position if you've gone in with multiple lots, reduce the position, or alternatively close the position completely, take your profit off the table, and just bank it and see what happens. The volatility indicator triggers in real time, so as soon as it's moved outside the average true range, you'll see it, and you then can make a decision accordingly. So it's a really nice strong move on the euro dollar. I'm going to pass back to Anna. We need to wrap up and run along.
Right, while David was speaking, I just actually brought up the euro yen chart. I've actually just got the 3-minute chart, and we'll be looking at that overextension. And as we can see here, what has actually happened is the volatility trigger has been triggered. The volatility indicator has been triggered, and immediately it's gone back into the range, range of the candle. But what's interesting, if we look at the R4 here, we had a clean a breakaway, and in fact straight up to the R5, which is what we're seeing reflected on the CSI. So, oh gosh, yes, I hadn't realized I've run on so much, and I've actually got to run because I've got an appointment later on. It just remains for me to thank you for coming along today. Very quickly, I know we've got some new people in. The indicators that we've been talking about are actually from our own company. They're ours. We've developed them to support our methodology, and they're from quantumtrading.com. If you head over there, there's a ton of videos and information support pages about the indicators and how you can use them and how you can integrate them into your own trading. You can just buy one. We have bundles, or you can buy the complete package. It's for a lifetime. It's all free upgrades. We're constantly tweaking them, changing them, and adding to the package. And in fact, if you buy the package, any indicator that we develop from the point that you buy the package are automatically added free of charge to the package. And we actually have a 7-day money-back guarantee as well. 24/7 support every day of the year, and you can transfer from platform to a platform. The only difference is there is a slight difference in price. The MT4, MT5 is 894. That's for the complete package, and NinjaTrader is 1197 because there are slightly more indicators in Ninja. But you can pay on the EPP. This is where we are at the moment. This is where we broadcast from and where we trade. This is from the education program, which is forex based, 5 modules. the cost of the program is 1391 for MT45, but that includes the indicators as well, and 694 for NinjaTrader. It's 50 hours of video podcast downloads. We have a community called Trader Chatter. You're more than welcome to participate once you are part of the program. And again, you can find more information at quantumtradingeducation.com. If you want more information, or you want to ask about anything that we've mentioned in the webinar, just drop me a line, anna@annacooling.com, or helpdesk@quantumtrading.com, or david@quantumtrading.com. So thanks so much for coming along. I'm sorry we've overrun. I hope you've enjoyed it. I hope you've learned something that perhaps you didn't know before. We are back next Tuesday, and we are back at the earlier time. So whatever you're doing today, have a great day, enjoy the rest of the week, and we'll catch you next time. Take care.